Hello, welcome back, guys. In this video, we are taking a look at Meta Platforms, and the company is having its earnings day in about 5 days from now. It's July 24th. But the interesting thing to note here is that it's being a sympathy play to Snapchat. Now, Snapchat, we have talked about, I have created a video about it. It's down about 27% pre-market. The market hasn't opened yet for the day, but it's gonna be having a very bad move in the when the market opens in the next few hours. Now the problem is that when we are looking at companies that are in a similar space, that is advertising, for example, then they can have sort of like a sympathy move. And Meta, along with the rest of the market, really, because Nasdaq is down quite significantly already in the pre-market, you will see that it's down about almost 5% again as a sympathy play to Snapchat, and we'll see whether that continues or it goes a little bit better when the market opens, but the fact remains that it is down. Now, I did want to make this video to kind of talk to you a bit about Meta and kind of compare it to Snapchat, see whether it makes any sense to panic that much. We should be expecting pretty much a lot of these companies to cut down on advertising a little bit for the upcoming quarters because of what has been happening with the overall economy. There are signals of the economy kind of getting suppressed a little bit, higher inflation. This will definitely affect companies, but the thing is, and what we need to be examining is how good a company is in terms of its financials, how cheap it is, and not really pay too much attention to earnings or what is happening today or this month or in the next couple of months. But we should be mostly paying attention to the overall business and what it's doing for the next, let's just say, 5 years. So, if we take a look at the futures now, you will see that Nasdaq is down about 0.77%. And so we are approaching an about 1% decline today for the Nasdaq, at least for now. It may go a little bit higher even as the US market opens or is about to open. Now, if we go back to Snapchat, there's a very important thing to notice here. Let's compare the metrics of Snapchat to the metrics of Meta, which I have here. You will the first thing that you will see here is the fact that everything on Meta appears to be green. That's a very solid hint here. Everything seems to be green. And if we go back to Snapchat, 4 of the main key metrics are actually red here, and it's only the growth that has been green. But even that green, some of these are not as good as Meta is, for example. And the problem is that even though some of these can be pretty nice and nice looking, they are also getting suppressed significantly. Now, this 400%, for example, is going to get suppressed because the company already told us that the revenue is going to decline. We're going to be playing out this scenario of declining revenue or basically flatlining revenue for Meta as well, see how that gets affected. Because the price that we got for Snapchat in the previous video I made, and I'm going to be linked to that at the end of this video, it was like $1 to $2, and right now the company stock price is $12, and so this is extremely expensive even now based on what it's doing financially. But it's the same thing happening with Meta here, is what we want to see. You will see with Meta, the current PE ratio is sitting at 13, and 12 is the price to free cash flow ratio, and it's going down today after the market opens, that's for sure, 5% about. And the outstanding shares also going down. Compare that to Snapchat, which was 40%, a 40% increase. Facebook is actually buying back shares, and it's actually going to continue to buy back shares. So this looks fantastic here. And what about debt? Total liabilities to free cash flow is 1 year. We just need 1 year of last year's free cash flow to pay back all the total liabilities that Meta has, basically having no debt here. And if we compare it again to a company like Snapchat, this was 20 years, 20.6. So a massive difference here in the economics of the companies. And we need to be wary of those. These are very important things to keep in mind. So let's go back here and see what Meta is actually doing in terms of its financials. We have obviously talked about it in videos in the past, but you will see that the income statement, for instance, of Meta has been growing from 40 billion to 117 billion in terms of revenue, and in terms of net income, 16 billion to 40 is about a threefold increase, more than that actually. So tremendous growth here for this company, and still trading at a very low valuation. Now the balance sheet of the company with buying back shares, remember, this actually propels the assets down. It actually takes the assets down because we're spending cash in order to buy this equity. We will see that the total equity of the company is actually still increasing, 75 billion to 125 billion, increasing very nicely as well. And the company really seems to be having some fantastic numbers here in terms of its total liabilities, 41 billion. But if you take a quick peek at the cash flow statement for last year's pretty much projections and what happened, it's 40 billion. It's about as much as we have in total liabilities. So we can just use this last year's free cash flow and pay off everything if we really wanted to. I mean, of course, the company is not going to do that, but it talks to you about how solvent they are. Very, very solvent, that is. And in terms of operating activities cash flow, you will see that it's sitting at about 57, almost 58 billion here. In terms of cash from investing activities, the company is purchasing some investments, very, very normal things, and capital expenditures, of course. And in terms of financing activities, minus 50 billion here. You will see that the company has been paying back a lot of debt. And take a look at this repurchasing of common stock. I love to see that as a shareholder, of course. Minus 45 billion is absolutely insane. But also, I mean, I want the company to be rewarding me for owning their stock. And the cash that they have at hand, about 17 billion. Free cash flow, 40 billion last year. So looking great for the company. Things are looking really, really nicely. But let's examine some other details. What do analysts think? What do analysts think about the price targets of the company? Where do they see the company at some point? You will see that most price targets are above $200, which makes a ton of sense. 245, 280, 275, and these are projections from last week, pretty much, July 19, 16. Because the company has been doing really, really well, all the implied moves are at least 50% from analysts, and it makes a ton of sense because, again, the company has been doing tremendously well in terms of the financials. Yet the current stock market, the current sentiment, and the relative drop in advertising, doesn't really help the company right now. It doesn't really help the street get a much more positive sentiment. And so this suppression of its price will keep going down. It will keep the company's stock down for a little while till things reverse a little bit. It may take a little while, but in terms of a long-term investment, this looks like it's a no-brainer to me, really. Now, I want to take a little bit of a peek at what has been going on with insiders, for example. Kind of gives me an idea of what insiders are doing for the company, especially if there are any buys, is what I want to see. For the most part, you will see normal stuff here, some options being exercised, some awards, typical moves within the company, typical movements, some sales, which are about the same since, that's exactly the same really since the last 6-month period. So nothing substantial going on here with the company. And in fact, the securities transacted are very little too over here, 342 out of a large lot. 1800, this is an award really, this is RSU, this is basically free stock being given to directors, employees, and officers. So yeah, not much to see here, it looks like. For the senators, you will see here, I'm using the old symbol because somehow it's not reported for Meta, but it's reported for FB. You will see here that purchases of 4 over here and sales of 4. So it's basically a picture that is kind of cancelling itself out really here, and about the same happened last 6 months, but it's a little bit more bullish here, it looks like. And there have been some sales, as you'll see. These are the small lots, $1,000 to $15,000 over here. And again over here a little bit of a sale. So there seem to be some sales in the last few months or so, but also some purchases, a lot of sales over here as well. Sale full for the last 3 months. This is basically the last 3 month purchases and sales. For the most part, is what you're seeing here is like just a few purchases and sale full. So purchasing and selling, that's almost like trading here. Okay, so not much going on here. It almost seems like there's not too much activity going on here for Facebook. Okay, let's go back now and examine our stock evaluation tool and see what to pay for this company is the next step. Okay, well, let's do that. Remember, if you enjoy this kind of content, remember to leave a like, that helps a lot, and subscribe if you're not a subscriber. So, and also, you can become a patron and get a full access to this tool, by the way. You can find links in the description box below this video. Now, the revenue of the company has been growing at a very, very nice pace over the years. We're gonna go lower. We're gonna do what we did with my Snapchat video. We're gonna go very low, like 5, 7, and 9 in terms of what we will be expecting from the company in the next 5 years. And I don't really think that's gonna be the case for 5 years, but let's just try that in case the company actually goes astray and the whole economy really does badly in the upcoming years. Now, the net income margin the company has been achieving for the most part has been near 33 to 34%. So we're going to go slightly less, 30, 32, and 34, suppress revenues a little bit, suppress margins, net income margins, and the free cash flow margin that the company has been achieving 80, 90, and 100%. Annual return of 13%. We don't really want to go 15 here. This is a much less risky company than Snapchat is. So hit calculate. And when you do that, you will see that with these very, very low estimates, it's only our low price that becomes a red. Again, with a revenue growth of 5%, net income margin of 30%, a free cash flow margin which is also very low, 80%. Very low estimates here, super low. We are sitting at 171, which is going to be very, very close to what the company is actually opening up today, more than likely, because it's down 5%. It's about there, 175. And remember, we used super low valuations, and the other tiers, the medium ones and high ones, were still in the green. And so this company has been really, really affected by the latest economic cycle, really, where things seem to be going down pretty much every month. But overall, it has been doing tremendously well, and also, what's even better, it's very cheap. And this is why it's one of my core holdings and top holdings, really, my top holding, really. I love this, I love what the company is doing, and I don't know what they're going to be doing with the metaverse. There has been a lot of talk about this one. There have even been some really nice videos showcasing what is happening there with the first metaverse event. And yeah, this is a thing to be seen for the next few years. But again, as a long-term opportunity, I see this as a fantastic company to add to our portfolio. And this is again why I do have it in mind. So thanks for watching again. If you did enjoy, remember to leave a like again. This helps a lot. And I'll see you soon in the next video. Tons of work for me. Lots of companies actually reporting earnings and lots of companies to talk about right now. Again, I'll see you soon. Bye-bye.